Now joining me from Wallbridge is the President and CEO, Brian Penny, for a fireside chat. Sir? Okay, good. Okay, well, thanks for joining us, Brian. Maybe we should start with just an overview of Wallbridge for those in the audience that might not be familiar with the company.
That's an excellent way to start. Wallbridge is a junior exploration company. Our main assets are in northwestern Quebec, the Fenelon project and the Martiniere project. They are closest nearest town is Matagami, Quebec. We have about 4.1 million ounces of indicated and inferred resources at Fenelon and about 1.3 at Martiniere, and we're continuing to advance and explore to unlock value. Recently we completed a PEA on the Fenelon project. Decent economics, cash costs of $750, all in sustaining costs about $925, 120,000 ounces a year of production, 12-year mine life. And this study was on Fenelon alone. And later on, I'll talk about the proximity to Martiniere and the opportunities we're pursuing. An NPV of $721 million at $1,750 gold. So obviously at today's gold prices, that would improve, but there's some time between now and commercial production that we will have to account for. And it's a very, very exciting opportunity in that part of the world, in the best jurisdiction to explore and operate a mine in the world, in my humble opinion.
Being the Abitibi Greenstone.
The Abitibi Greenstone, yes.
And other than Fenelon, would you have any other projects you want to highlight in the portfolio? Or?
Just Martiniere.
Okay. So that's a good segue, I think, given obviously the PEA marks a point in time vis-a-vis the project, its economics. How do you see advancing that PEA obviously to the next level of study and enhancing so far the economics you've already delineated?
Yeah, it's, as you've heard in the group before me, the junior environment in Canada is challenging. It's hard to raise money in this environment. It's hard to get the focus. There's a lack of institutional shareholders in the sector. And I've been in this business for 30 plus years. I was the first CFO at Kinross from 93 to 2004. And I remember $250 gold like it was yesterday. And at that point in time, juniors could not raise money. There's always a time lag, as the last discussion point, about money flowing down the chain. And my humble opinion is we're starting to see the valuations improve on the seniors. It will come down to the mid-tiers, and then eventually it hit the juniors. Is it 6 months from now or 9 months from now? It will come, and there will be people looking for opportunities like we present at Wallbridge.
And how do you expect, despite your comments of the challenging financing environment we find ourselves in, which is a reality, and I think we all agree we're seeing green shoots of improvement, you still have a business to run, a job to do. So what are your thoughts on going from PA to feasibility and how you might accomplish that financing?
Well, that's an excellent question, because last year, when the market was, was the darkest of the night, when we were preparing our budgets, we looked at 3 options for Wallbridge. One was we shut everything down, lay off all our geologists, put it in inventory and do nothing. But that's not a value. That's a value destruction move. So, that was quickly X'd off. Then we said, okay, we've got an attractive feasibility study on Fenelon. Should we go to a pre-feas and ultimately a feas? But the money we needed to do that was more than $50 million, and the dilution would be more than 50% to our shareholders. So we said, that's not a good move. So what we decided to do is, because Fenelon and Martiniere are 30 kilometers apart, we need to assess the synergies between the 2 projects, because there can be a common mill facility. Some of the things we're working on is, and then we raised $10 million of flow-through, closed the year with $24 million in the bank, and so we were fully funded for this current exploration program. Okay. On top of that, we love our properties being in the province of Quebec, because the Quebec refundable tax credit regime is incredible, and after you file your tax returns, usually subject to audit, you'll get your money in October. We actually got our money 2 weeks ago, so that was another $8 million to the coffer. So we're looking to close the year with $14 million in the bank. If we have a similar program next year, we would have to top it up for about $7 million. Maybe we get lucky and the refundable tax credits from this year come in early enough next year that the financing becomes very small. But, we have to look at that. And then, with that financing in place, the thoughts went to how do we create value in this challenging environment? And our approach was we would look at the synergies between Fenelon and Martiniere. We would look at, this year we got 23,000 meters of drilling to complete. About half of it is on Martiniere, 5,000 on Fenelon, 5,000 look at regional targets, because the property position we have is 830 square kilometers. To put in perspective, it's about the size of not the GTA, but the city of Toronto. So it's quite an impressive property position in the northern Abitibi Greenstone Belt. So the challenge is there's glacial overburden there that we have to see through, and we've proven ways to discover and advance that. So our goal is by first quarter 2026 to publish a new combined PEA. How do I think the synergies could work out? We've just started the work, but maybe we focus Fenelon on, a smaller, higher grade core of the deposit, factoring Martiniere into it. Maybe instead of building a 7,000 ton a day mill, it's a 5,000 ton a day mill. It takes the pressure off of Fenelon because the current plan has a sinking shaft after commercial production. Well, maybe we can delay that by a few more years. So it gives us a lot of opportunities to look at this in a very constructive way with the goal of creating value.
Excellent, excellent, and congratulations on being fully funded in a market like this. So maybe we could, no pun intended, drill down a little bit into the drilling program, into the spend, and what you envision accomplishing with that.
Yeah, our drilling program this year we have 4 phases to it. The first phase was infill and extension drilling at Fenelon. That was completed. It was sort of a continuation of a program last year that was completed in the first quarter. We announced our assay results in May, and it's very encouraging, some high-grade intersections. It's more of the same, but we filled some gaps and we found some extensions, so that was the first program. Right after that, we moved the drills to Martiniere. Martiniere, part of the program this year is for, rock characteristics. We're going to do a MET sample because Balmoral, a predecessor company, did a MET sample 8 years ago, and unfortunately, the material they used for the MET sample, the resource is now moved a little bit, and we want it under our nameplate, so we're going to do that as well. And for geomechanical and all those things to help us with the PEA. So, that's the second program. And that drilling is completed. We're just waiting for all the work to be done. We should have results later this summer, and the MET results, after Labor Day sometime, probably early October.
Okay.
The third part of the program is, being that we have 830 square kilometers, Mark Peterson, an ex-colleague of mine at New Gold, has come in to help, with the young team to look for opportunities on regional targets. We identified about 7 of them. And we are, starting that program tomorrow. We will be looking at, starting with one of the properties is called Harry. We will be drilling that first and then moving on a success basis. And then in the fall, we'll go back to Martiniere and finish off the program this year. Initial program was 5,000 at Fenelon, 5,000 regional, 13,000 at Martiniere, and at the end of the day, there'll be a little less at Fenelon, but more at either Martiniere or the regional targets, but the total number is 23,000 meters, and the difference between property to property cost per meter is not significant. So it's all success basis, focused on where we can get the best results for our shareholders.
So lots of catalysts to look out for through the summer, through the fall.
Yep.
Okay, very good. Martiniere, you've touched on it being a key satellite project, important to the combined PA. Anything else you want to, highlight there for the audience?
Not really. It's Martiniere is about 3 years behind Fenelon. One thing I'll say is that since the PEA model was prepared, we've drilled 30,000 meters at Fenelon, 20,000 at Martiniere, which need to get factored into the model for the next study. We've identified about 5,000 meters of historic core at Martiniere that we're going to, after the season's over, send for assaying because there's some interesting observations on it. And then, there's continued drilling this year that need to get in the model. And then, once we have a chance to analyze all this information, we probably got 6 months next year. If there's, a hole somewhere we need to follow up on, or maybe there's an extension we need to follow up, the plan is to take the first part of 2025 before we put a pin in the map for our resource model for the PEA at the end of the year.
Okay. Maybe we change gear just for the last few minutes. Obviously, Junior Explorer Co. generally supported by retail investors. And I did a little Google search before, and I noticed some themes that came out of your investor base. Maybe you can share some of the feedback you've been getting from some of your shareholders on certain topics like naked shorts, as an example, or the topic of a reverse share split, and what your opinions are on that.
No, those are two good questions. With the retail shareholders in Canada, there's a movement that the published short positions are substantially less than the real short positions. And that, naked shorting is holding stocks at an artificially low level. We're investigating that. We're going to have somebody do some analysis on our trades to see if we really have that problem. I don't believe we do, but we need to address it and put it behind ourselves. So that's the first point. Regarding a consolidation of shares, we have 1 billion shares outstanding. And if we were to consolidate today, we would lose 20% of our market cap. Now is not the time to consolidate. And there may be a time in the future, but for now, it's business as usual, and we need to focus on increasing the market cap of the company, and that will flow into the bottom line.
Okay, good. Thank you. I didn't mean to be controversial there, but I knew I'd get a straight answer.
Yeah.
And then just, finally here, we've got a couple minutes. I think you've touched on a bunch of really positive catalysts and positive attributes of Wallbridge. I just wanted to give you an opportunity to summarize those in terms of, differentiating Wallbridge from other junior Explorer Co's.
Well, two things that differentiate us from most explorers is our location. It's on the northern Abitibi. It's in the province of Quebec. We have great First Nations partners. We have the Cree communities of Waskaganish and Waswanipi, and the Algonquin community of Abitibi-Winni. We have pre-development agreements with the two Cree communities. We're working on an agreement with the Algonquin or the Abitibi-Winni, which we plan on having in place by the end of the year. We have great relations with the nearest community, the town of Matagami, which is about 70 kilometers away. So, working well with that. Every time I go to the site, I drop by Matagami to meet, the mayor and the business development gentleman. And usually we've had our Cree partners to Sudbury because there's a great training center in Sudbury, and they were looking at setting up a training center. So we help them with that. So we've met with them regularly. And, every time the closest community is Abitibi-Winni. It's in the town of Picogan, which is just outside of Amos. I go by there to visit them. I've been the CEO for 6 months, so I'm new to the story. I'm learning, but I had a mentor many years ago when I was at New Gold, a guy by the name of Bob Gallagher. He was excellent at First Nations relations, and I learned so much from the guy, and I plan on operating with the same playbook.
That's great. Well, thank you for your time. Thank you for sharing the Wallbridge story, and we wish you all the best in the future and look forward to watching your catalysts.
Thank you.
Thank you, sir.